Welcome, everyone, to The FoRC, the Future of Regulatory Compliance, a new series from Solidus Labs where we unpack the ideas, policies, and innovations shaping the future of finance in the age of digital assets and AI. I'm thrilled to launch this series with a real policy rockstar. Our first guest is Dante Disparte, Chief Strategy Officer and Head of Global Policy and Operations at Circle. Dante has truly been at the center of it all. He's been one of the most influential voices in digital assets and instrumental in bringing stablecoins from an industry concept into the mainstream of global finance and policy. Together, we go deep on how stablecoins are transforming financial markets and accessibility. What are new approaches they are driving for risk monitoring, like ecosystem monitoring? What's next after the Genius Act finally passed? And whether blockchain transparency can make finance not just more open, not just faster, but also safer. We even talk about Alexander Hamilton. Let's dive in. Dante, you and I have talked about recording this episode for so long, and it's finally happening. It's such a huge pleasure to have you, not only on the DACOM Digital podcast, but as our first guest on a new series that we're launching, The FoRC, the Future of Regulatory Compliance. So before anything else, welcome. How are you?
Thank you, my friend. You're no doubt, this is many, many years in the making, so it's great to be on with you.
Yeah, it's been wonderful to collaborate on many, many things. But before we get started appropriately, I've mentioned this to you, but I think this is a good opportunity to reveal to the broad public. I'm a huge fan of Hamilton the musical. I know I'm not the only one in the industry or the only one at all, but I've watched it about 5 times by now at Broadway. And the more I watched it, the more I think that, Dante, you're the Hamilton of crypto. Born in the Caribbean, Puerto Rico in your case, I'm not sure if everyone knows. Very multilingual, multicultural, entrepreneurial. You have a bunch of companies under your belt, and a writer and an intellectual. And anyone who follows you knows, to quote the musical, that you're definitely writing like you're running out of time. So if you don't mind me starting with this, why do you write like you're running out of time?
Yeah. Well, first of all, that's incredibly flattering, and I would blush if I could. First, it's if you think about what the end state should be of the fork in the road of this industry, there's 2 choices to make. I mean, one, what we're doing at Circle is profoundly in the interest of humanity, right? And so, if you believe that digital assets, open infrastructure, open technology allows us to bend the arc of Moore's law in humanity's favor, then we should be totally friggin' restless in trying to get that done well and do it fast, while at the same time not cutting corners and not taking safety, soundness, financial integrity for granted, and trying to build where those 3 things can work together: innovation, inclusion, and integrity. So that's just been, it's not a job for me, frankly. It's just been a mission. And so, yeah, if the Hamilton reference is where we're starting, then incredibly flattering. I do think there's a lot of real work to do.
Well, obviously, I'm semi-joking, of course, but I do think there's something about this moment of reinventing finance that's alluding to it. And, I mentioned all the other similarities, but to not make you blush anymore, I'll move on at this point. Even before you and I met a bunch of years ago, I was following you like many others. I feel like you've been one of the earliest and most consistent voices arguing that the blockchain and stablecoins can expand financial access. Not just, you were always doing it, not just in our industry's echo chamber, where it's quite comfortable, but in think tanks, pushing it to academia, to government, where really the decision-making is happening. I'll quote you back to you, and it's a direct, I think, echo of, what you just said. In 2020, you wrote to the Harvard Business Review that blockchain-based payment systems could bring 1.7 billion unbanked people into the formal economy, including, by the way, 25% of U.S. households. So fast forward to today, stablecoins now settle more dollars than Visa and MasterCard combined. It's a different story than 5 years ago. How close are we to that vision that you opened with, right? Especially on the accessibility point, but more broadly, and how are Circle and stablecoins more broadly are living up to it?
Yeah, and well, thanks for going back into the archives. That piece.
I had to prove that you're writing like you're running out of time.
Right. Well, that piece in Harvard Business Review was trying to shine a light on what would be the around the corner opportunity if the technology started to reach scale. And in some respects, 3 preconditions had to be in place for anything that I wrote in that article to become a reality. One of them, obviously, is technologically, if this were the internet of value, we had to move from the dial-up phase to the broadband phase. So that's one precondition that needed to be put in place. The second precondition that needs to be put in place is obviously more ubiquitous access to the last mile infrastructure, which fundamentally is a basic internet connected device and a cryptographic wallet, a privacy preserving wallet that can become a financial services endpoint. And then the last precondition, and frankly, I actually think this is the biggest breakthrough, is legal and regulatory clarity in most of the world's jurisdictions, because that then gives entrepreneurs, operators, companies, investors the choice to make. Do you build this in the light of day, or do you relegate crypto and digital asset innovations to the shadows? And for the better part of my entire career in the sector, too much of the sector's reputation and brand has been defined by the worst actors. And by today's standards, if you're an unregulated operator in crypto, it's because you chose to not be regulated. And so I think that was the last piece of the puzzle that was missing over this past 5 years since that article was written. And so today, then we have no excuse for why so many people are still on the edges of receiving extremely costly and extremely slow remittances. We have no excuse for why even domestic payments in the United States is wanting of competition and speed. And we have no excuse for why, so much of the financial system still takes bank holidays. And so I think the next 5 years are going to be a lot of fun.
Yeah. So, and the 5 years after them. But no, it's really remarkable to see where we are today. And I think you and I have talked about this in the past. We're sort of at a stage in the digital asset space where the future depends as much on, the future and fulfillment of the potential depends as much on, on legal thinker and regulators as it does on engineers and technologists. But I really feel like we're getting to the apex, and we'll definitely talk more about regulation. And, if I go back again to that article that I quoted, that's a point you raised then as well. You noted that the blockchain's openness, right? We talk a lot about the transparency, but the openness also made it popular historically in the darker corners of the internet.
Mm-hmm.
And as you mentioned, that's been one of the biggest hurdles for adoptions. High rates of financial crime in crypto. Now, I do have to say that whenever this point comes up, I have this physical urge to remind people, but it's not like these issues are solved in traditional finance.
Yeah.
In any way. I mean, if you look at the data, it's actually quite daunting. I believe the number of 1% is often, touted as the percentage of illicit activity that is ever caught that happens with US dollars. That's a problem we focus on at Solidus every day. You mentioned the light of day. Sunlight is the best disinfectant is one of our focuses. How do you prevent this crime? How do you enable the potential of openness and decentralization by mitigating the risk? And so, I'll just, I guess, ask you to elaborate on that. How are we doing as an industry on fighting financial crime in crypto? And I guess how is Circle, who is really the leading regulated stablecoin, addressing this head on?
Yeah, first of all, it's an incredibly and profoundly important question, which is, we could almost start the response with a bit of a joke, right? Why do people rob banks? It's because that is where the money is. And honestly, for the better part of my entire career in the sector, and certainly the last 5 years, with this intense rulemaking process and with this intense litigation in the media, where people conflated the word crypto for illicit activity, and people did not disassociate good from bad in the entire sector. And that would be the equivalent of having every bank atone for the sins of single bad banks. And so, for example, this is not about one versus the other. It's just reality. When the Danish bank Danske Bank was implicated in a multi-$100 billion Russian money laundering risk, not all banks had to respond to that single bank's misdeeds. But yet in crypto, again, the category is not monolithic. Whenever and wherever there was an issue, the Colonial Gas Pipeline ransomware attack, the narrative in the market and the media and in the policymaking circles was crypto equated to ransomware, when in fact there were single digital asset products, in that case Bitcoin, was the medium of exchange for the ransomware attack. And the precondition that gave rise to the ransomware attack was basic cyber vulnerability. and our proclivity between the keyboard and the chair to press buttons and so on. And so I think that's like issue one. The technology doesn't naturally yield illicit activity. Step one. Step two, the technology, including and especially because of companies like Solidus and many others in that space, have built up what I call this digital asset fire brigade, and a set of tools that are completely universally accessible across blockchains, ecosystems, and beyond, that are giving bad actors and illicit activity few places to hide. And that feature of discoverability and permanence and beyond has really created a cottage industry around financial integrity firms and digital asset integrity firms like Solidus and many others that are like the veritable smoke detectors, fire alarms, and lane departure systems of this novel internet financial system. I think that is not only materially better for the world. I think if you stack up the scorecard of combating illicit finance in the traditional financial system versus this internet financial system, I would argue that we can do this work exponentially better than our peers, because all of us have the same objectives. No one should want any corner of basic financial access, which is a human right, to also come with the likelihood of ransomware, corruption, bribery, and fraud, terror financing, and all of the rest, nuclear financing of rogue nations and beyond. And I think when we align good actors in the digital asset industry with companies like yours and others, we have a chance actually to combat all of this crazy activity that happens with money everywhere, and also ensure that access doesn't equate to this kind of lockout.
Obviously, couldn't agree more. And we've also had the pleasure. I didn't mention at the beginning, but we've had the pleasure of developing really important policy initiatives like the Crypto Market Integrity Coalition, which Solidus launched in partnership with Circle 2022. There are now 50 organizations committed to preventing these sort of issues, and just generally, advocate for it for a long time. And I think it's fair to say, it's really remarkable in our day-to-day work with compliance teams, just how committed they are and how much the industry has gone in 5 years, which really it makes me share your sentiment that, like, if we keep at it for the next 5 years, if we utilize the transparency of the blockchain, we'll do really well. But obviously, regulation plays a really important part here. And really, if you're into crypto regulation, this is a wild time to be alive. I don't know how else to put it. I have like Google alerts on crypto compliance, crypto regulation, and now spamming my inbox, while a couple of years ago it was once every couple of months I get something. We know that the Genius Act has just been signed into law in the US. If you don't mind me, giving a path to the OCC and Fed-regulated stablecoin issuance. There's now a flurry of RFIs and comment requests from the Senate, from Treasury, as they're from Senate, from Treasury, on kind of how we move forward. The Senate is obviously working on creating market structure rules after clarity passed the House. Now, I know for a fact that you and Circle have been at the center of a lot of this, spending a lot of time on Capitol Hill, having done that globally beforehand. Let me ask you straight: do we have clarity, or is this just the end of the beginning? What's the big next items for regulators to tackle, and what's it going to look like?
Yeah, well, since you quote Churchill, I will give another Churchill quote, which is that the U.S. will do the right thing, or a paraphrase rather, we will do the right thing in the United States when we've exhausted all other alternatives.
I just watched Our Darkest Hour.
Yeah. And look, there's no question. The Genius Act is, I'm willing to say, the first piece of financial regulation in U.S. history that is unequivocally pro-growth, unequivocally pro-competition, and so much bigger than crypto or stablecoins. And in order to have gotten to getting the Genius Act into law, I was lucky enough to not only have been there at the beginning, arguably the Libra hearings from almost 7 years ago in some ways were real catalytic, and to have been there at the White House in the signing ceremony. And so in some ways, those are the bookends of my journey through the sector. And obviously Circle and our policy team have been intimately involved in every facet of this from the beginning. Jeremy Allaire, as an example, was the very first witness in a crypto hearing back in 2013.
Oh, I did not know that.
Called virtual assets or something like that.
That's a good trivia detail.
And so we have a long DNA as a company in trying to race to the top. But Genius is, dispelling the myth. There's nothing in Genius that is about regulatory capture or political misdeeds in Washington. It is a totally bipartisan bill. 108 Democrats voted in favor of it. Its origination began in the House Financial Services Committee when Maxine Waters was the chairwoman. It then continued in the House in its earlier forms under Patrick McHenry's leadership. Then obviously the leadership in the Senate Banking Committee, Haggerty, Tim Scott, and so many others really put in extraordinary effort, and a bipartisan effort at that, to ensure that the final product would be durable. The final product could weather political changes in the United States and around the world, and critically, that the final product is an export product from the United States. The real reason I got into this sector was because of national security and economic competitiveness. And in the end, the Genius Act not only totally enshrines this category of legitimate uploaded digital dollars on the internet, like Circle has done, as the U.S. strategy for competing in this digital currency space race. It allows us to now export these around the world. One last quick Genius point is that if a bank wanted to issue a stablecoin, they would have to do so from a balance sheet, an entity that looks more like Circle and less like a bank. So in that sense, it's also a safety and soundness standard, more conservative than global banking. And so that's a bill and a piece of legislative progress that we could trust and build on top of.
And I guess there's a lot of discussion right now about market structure. I'll ask you for some predictions later, but before we do, if we just dive a little deeper, I mean, obviously, Genius is about primary markets, issuance, and everyone is waiting for clarity, ideally through legislation, potentially through rulemaking, if Congress can get to it, on market structure, on secondary trading. I guess just some thoughts from you on what do you think should happen next, either on the legislative side, on clarity, or on the rulemaking side. Like what is this going to look like as it turns into actual licensing framework by the Fed and the OCC?
Totally. Well, first, market Genius is in fact, while a broad bill, it is narrow in terms of the activity that it contemplates, right? So broad in that it allows for state and federal chartering of stablecoin issuers. That is a pro-competition mandate. At the state level, you can compete up to 10 billion, and then you need a federal framework. So it protects this notion of fintech federalism that is a unique feature of our country. The states are laboratories for democracy and innovation, and so Genius protects that. But it is narrow in the sense that it only addresses payment stablecoin issuance, redemption, and the corresponding safety, soundness, transparency, accountability, and financial crime compliance that comes with it. An extraordinarily strong bill. And critically, it also endows the Treasury Department and other U.S. entities to work with reciprocity at heart with their international counterparts for the first time ever. Because many countries have had crypto rules, including for stablecoins, but the U.S. was a laggard, and we finally caught up. But without getting crypto market structure legislation across the finish line, be it through rulemaking or independently through congressional action, the U.S. will still face a gap in this market. And when you compare, for example, Europe's framework, the markets and crypto assets framework, to what we have now in the United States, MiCA has in it a whole host of other activities contemplated: trading, what's a security, what's a commodity, a taxonomy, and beyond. And the Clarity Act that is currently our proposal of reference in the United States would up-level that side of the equation as well. Because frankly, most of the misdeeds in crypto begin in market conduct. And in a world where that's why the market conduct initiative we launched together with Solidus years ago was ahead of the curve, because most of the actual misdeeds in this industry don't occur at the issuance and redemption level of a stablecoin. They actually occur in the exchange activities. They occur in the boundary lines and the blurry lines between what's a commodity, a security, a collectible, or a currency. And all of that needs a set of market conduct standards coming from the United States. And I think that's coming. I think there's a world in which we could get, I'm going to use my crystal ball early, in which we can get U.S. regulatory clarity on market conduct and market activity under the Clarity Act before the end of the year.
All right. Well, that's I've been hearing conflicting opinions about this every time I'm in Washington. Though I should say, the more time I spend in Washington, the more I understand that I don't understand it. But it's a very exciting to hear it from you. And obviously, we're all working on it together as an industry. It's really quite remarkable to be in Washington as a digital assets person these days. These days, lots of consensus, but also lots of politics. So I'll join you in hoping that that's what happens, and we'll of course continue to advocate as a community for that sort of clarity. And I guess as we get this clarity, and you've already kind of touched that, I want to get to the crux of our conversation. The title that I picked for it is really, how are stablecoins making finance safer? And so if we go back again to the premise that, well, it sometimes feels that way. Traditional finance isn't really safe. I mean, and crime is growing there as well. The percentages of illicit activity actually detected is lower. There's still 20% insider trading if you look at traditional US stocks, according to a study by the University of Technology, Sydney. What is the difference that stablecoins can make here? I feel that increasingly regulators really see stablecoins, blockchain-based finance, on-chain finance as a test case for this. Can it actually become safer? And you're starting to see a reevaluation of things that have really been at the center of government's attempt to fight illicit crime. And I guess I'll specifically reference Commissioner Hester Peirce, aka to many crypto mom, who's also been, nicknames aside, has just been so for such a long time so committed to understanding how we regulate this in an effective way. She recently critiqued the Bank Secrecy Act. Of course, the Bank Secrecy Act, I assume a lot of our listeners know, considering this is a podcast about compliance and regulation, but is really the foundation of how governments utilize banks in order to fight illicit activity. She described it as a blunt surveillance tool. I believe she used the term sledgehammer, potentially. It forces banks to create millions of reports that in many ways are low value. The statistics about suspicious activity reports is that 96% of them don't really get a lot of attention from regulators or lead to enforcement. And she also suggested that the blockchain could let us rethink compliance. How do you use the transparency to monitor more broadly, but less intrusively, maybe, is one way of thinking about it. So my question to you, do you agree? How do we use this technology to rethink financial compliance in light of on-chain transparency?
Yeah. Well, first of all, I mean, I think the word safety, I thought originally when you were going to title this section or this session, it would be Stable Genius or something like that. But but if you're going to, first, I think if we're going to use the word safety as the premise for this question, we have to also begin with economic safety. That no bank could withstand a run on all of the assets or deposits in the bank. That's why, from a prudential risk vantage point, the Genius Act is also a total breakthrough in acknowledgement of the fully reserved nature and the totally disclosable nature, including with criminal penalties for the CEO and CFO of a stablecoin issuer that misstate assets held in the interest of coin holders. This is a breakthrough. And nothing in the payments domain, nothing, period, has that level of safety, soundness, prudential risk attached as a regulatory obligation on the issuer. That is Circle's way of doing business, enshrined as law. And so by those standards, a stablecoin under the Genius Act, payment stablecoin, entitles the holder to a right of redemption at par, even in the issuer's bankruptcy. There's nothing in payments or banking anywhere, which is why you need all of these external layers of support and external layers of bank guarantee programs, deposit insurance programs as a backstop because of the fractional reserve nature of banking. Now, Don't get me wrong. I also don't like false equivalencies. Banks do something really important, which is to create credit and lending, and that's the premise of their business model. But on that score of safety and soundness, the Genius Act totally up-levels what it would mean to have access to a fully reserved payment stablecoin-based payment system. The other thing in which there's safety and soundness is it overcomes the really insidious walled garden problem we have in payments, which is that if you want fast payments, you have to, and you're inside one of the existing global payment networks, you enjoy it only inside the walled garden, but not outside. So I think there too, because the Genius Act is technology agnostic or neutral, you can now envision a world in which people will not only have safe forms of money on the internet that are fully reserved, they will also enjoy payment systems optionality through these networks. The last point, though, is the national security imperative and the fact that, yes, the Bank Secrecy Act is a 50-year-old policy proposal that, in the face of always on economic illicit activity and crime and ransomware and internet-born and internet-scale bad actors, we need to level up for both public and private use the approaches around financial access and being able to micro-target illicit activity down to the wallet or the individual. So here is where I have two big thoughts in mind. One, we need a financial services bill of rights that begins with the notion that to the right of lawful, the use of money should be free. We have to anchor that. And I know great minds like Chris Giancarlo and others would agree with this notion that it's not about the technology. It's actually about imbuing in the technology a set of national value systems and expectations. So the beginning one for me, if I were writing a financial services bill of rights, would be that to the right of lawful, the use of money should be free. Mm-hmm. The second is that not just the BSA AML frameworks, but also the post 9/11 view of the world, in which, whole continents and whole regions of the world through financial de-risking are cut off from the formal economy because of fear of one bad payment executed by one bad person. Digital assets, blockchain, crypto, technologies like the ones you bring to market allow us to totally turn that pyramid on its head and envision access to money and payments anywhere, including in potentially hostile countries, because the implied controls and value systems follow the money, as it were, and you have an ability to deplatform an individual bad actor as opposed to debank and de-risk an entire continent. And I want the United States to be at the very, very bleeding edge of that. Because if you think of the ultimate form of payment system competition, you don't weaponize money. You don't weaponize the US dollar in a context of geopolitics and geoeconomics. You weaponize the rails on which it rides. And a lot of the actual geostrategic competition for money movement is in moving away from the efficacy of US sanctions and Western sanctions and moving towards a world where alternative payments emerge, hence the central bank digital currency race around the world. It's about moving away from the dollar. And so a world in which we have the Genius Act, we have responsible actors, we could actually pierce through dollar access everywhere. And dollar access everywhere shouldn't have to necessarily equate to this insidious form of debanking and insidious form of de-risking.
And you can really see it happening. I mean, I believe the statistic today is that 99% of stablecoins are USD backed. These various surveys. And what's interesting about these surveys is you can also see how around 50% of activity already is not about trading crypto, which I think is kind of like an easy to go to assumption by a lot of folks who challenge the crypto industry. 50% of it is about people just wanting to get paid with a stable currency. People want access to the dollar. And it's kind of cool to see how, utilizing the technological rails, the blockchain, the US essentially winning in a way, can win, and I think is winning right now if we continue on this path. The war against de-dollarization and all the cultural and value implications that come with it, in some ways without even having to try too hard.
Well, and since you're the only subscriber to my archival writings, I wrote a piece. I wrote a piece in Project Syndicate that was a little bit of the counterfactual analysis on, it's titled "Is America Losing the Digital Currency Space Race?" When it was counterfactual. My answer then is the same now: is that we're not. And one of the big fights we have had to have over the last 5 years is to CBDC or not to CBDC, central bank digital currency. Should the Fed issue a digital dollar at the retail level, or should the United States compete in rules-based open free market competition? And to your point, it is unequivocally the winning product, including from China. The Chinese central bank, the PBOC, originally was the first major central bank to launch a central bank digital currency, the ECNY. And today's news cycle is, well, the Chinese government is contemplating yuan-backed stablecoins. because that category is where the market is and where the network effects live of this product category.
Yeah. So yes, I do subscribe to your archival writing, but ChatGPT helps sometimes when you want to find a specific quote. Um, you know, I think the CBDC conversation is really interesting. Just since I have you, I guess some thoughts on the anti-CBDC act that kind of long. It got much less coverage, although it almost derailed the whole process.
Yeah.
There's essentially a bill that was very important to Congress conservatives that essentially prohibits the U.S. government from issuing its own central bank digital currency. So I guess just since you brought, before we go back to compliance, since these up, on where that legislative conversation might go.
Yeah, first of all, I'm glad you asked the question because you're right. No one had in the cards as we were watching. It almost felt like the crypto Cuban Missile Crisis. That
it really did. It really did.
That what was such a well-laid opportunity to not only give the administration a legislative victory, the country a much-needed legislative and regulatory victory, and the U.S. dollar a way of protecting its role as a reserve currency around the world, clarity for the next 100 years, got entirely potentially upended by a crypto mutiny on Capitol Hill and a mini insurrection against central bank digital currencies. And one of the biggest ironies, actually, is that if you read all of the Project Hamilton papers, the Fed's central bank digital currency original prototyping and pilot project team was based out of the Boston Fed. And if you looked at the Project Hamilton body of work, what they were looking at was wholesale upgrades to dollar settlement. And at no point, number one, was it meant to be a retail innovation. It was meant to be a wholesale innovation in dollar settlement, number one. And number two, and this is so important, this is why literally that insurrection was much ado about nothing, in my opinion. The Fed itself acknowledged that if it were to launch a CBDC ever of any flavor, wholesale, retail, hybrid, wouldn't matter, that they would need congressional approval anyway. And so, frankly, a lot of the anti-CBDC movement served perhaps as a good foil for people wanting to support crypto and being responsive to our country's strong bent towards privacy and financial privacy. But the Fed itself acknowledged that it needed congressional authority to launch a CBDC from the beginning. And so the anti-CBDC movement that nearly killed the Genius Act, or at least created some political risk to it, was much ado about nothing, in my opinion.
Yeah, I mean, first of all, really interesting to hear that perspective. I will say that the mood swings on Capitol Hill in the crypto community that week, I think turned week by the administration, were really, not far from a roller coaster.
And ironically, we thought crypto was the volatile asset. It turns out getting laws passed and not scoring own goals was the volatility that week.
Yeah. We were up, we were down the whole time. We felt a little bit nauseous, but then we went down and we were all very, very happy and celebratory, right? So I want to go back a little bit to this question of how do you take the advantage of the blockchain, the transparency, but being aware of the challenges of openness and find appropriate guardrails for it. You used a lot please bear with me. I have an allegory that I've been carrying in my mind for a long time, and I'm excited to finally share it. But you've been using a lot the open garden allegory. The more I got into this space and to the world of compliance, the more it felt to me a little bit like traditional finance is a bit like a closed party, like you said it is in practice. And people want to go in. And when they go in, there's a bouncer. Compliance is really sort of acting as a bouncer in traditional finance. And the bouncer its job is to check out everyone, look them up and down. And then based on a set of binary checks that are, unless you pass all of them, you can't go in. If you pass all of them, you can go in. And I'm talking about, identity checks, etc., stuff that might seem trivial to a lot of people, but are very difficult in other places. As you said earlier, there are more people probably in the world with with an internet phone than with an ID that can help onboard them to a US bank, right? But suddenly, the blockchain comes with products like stablecoins, and we have an open party. That's the whole point. Everyone can participate. It's a bigger, more fun party. It can create. but the compliance model doesn't work. Now, mind you, I'll remind again, it didn't really work that well in traditional finance as well, because what happened is that you still had issues at the party, and then maybe at the checkout someone would arrest you or do something with you if you did anything illegal. But how do you become, and I go back again to the way you described it, much more surgical, much more succinct. You're seeing already then sort of the application that Commissioner Peirce described of the BSA as a sledgehammer, right? How to become more surgical, more effective in this open environment to enable it. In Hong Kong, actually, there's an ordinance that came out recently about stablecoins. It's super interesting because if you read it, it seems like the Hong Kong Monetary Authority essentially asks industry actors, stablecoin issuers, users, etc., to propose ways for continuous monitoring using the transparency of the blockchain, in which case they may not require verifying the ID of each transaction.
Mm-hmm.
So you're seeing regulators starting to think differently between Commissioner Peirce and HKMA and others, and then step in, cue in this idea of ecosystem monitoring. The idea that when you have all the data publicly, you can actually monitor for where illicit activity is and really decide just to, instead of like verifying each transaction, to focus surgically, where you can. So apologies for the long.
No. It's.
But apologies for the long premise. But I'm curious for your thoughts on how do you, about this concept of ecosystem monitoring, how it helps bridge the difference between what regulators need and this new open nature and transparent nature of blockchain-based financial products.
Yeah. First of all, I hate to say it, I'm going to now borrow the party analogy because I completely agree with you. And in the worst case, the bouncer might be conducting compliance theater or security theater. In the best case, there may very well be the ability to catch bad actors. And this gets to the crux of what would be the second thing on my stablecoin or payments or digital assets bill of rights, which is that we have right now in modern finance, we have the presumption of guilt accrues to the individual or the entity being banked or being provided the financial service. And so you have a burden of proof on showing that you're not in fact a bad actor, hence all the checks that you just described. But that doesn't necessarily equate to making the financial system any safer. In fact, opaque banking, opaque rails, legal differences in condition in different jurisdictions all amount to many places to hide illicit activity, right? Now, what blockchain finance allows us to do, not only for the technological openness and resilience and access and tools and novel ways of doing novel things, including combat illicit actors, is allows us to then have the presumption of innocence for basic financial access and the proof of guilt. And the proof of guilt can be down to literal digital breadcrumbs that get to a bad actor conducting a ransomware attack. And this goes from the very beginning. I wrote an article in Forbes about the WannaCry ransomware attack of 2016, which went from 0 to 160 countries over a weekend, crippled the healthcare system of the United Kingdom. And even then, by super rudimentary crypto integrity standards and tooling, the whole world was able to train its eyes based on the magic internet looking glass on the single wallets that accrued something like $65,000 worth of Bitcoin back then. Right. So not only was the economic dragnet of the ransomware attack small, the cost of moving even a micro transaction from that one wallet was very high because the whole planet could see and penalize the bad actor as opposed to the bouncer at the door assuming everybody is bad. And so you're totally right. And that frankly is the unlock of digital assets. And it analogizes then to what would have happened with telephony in or the mobile internet access if the only way you ever had access to it was through fixed infrastructure and fixed checks and balances and fixed standards. And so here we have this decoupling of financial access from fixed infrastructure and this decoupling of financial access from, again, a lot of the what might be theatrical activities or activities conducted by companies with legitimate interest in protecting the system, even if they know those activities aren't as effective as they could be in combating bad actors. And so I really do like the idea of the party. And if you see an unruly person at your crypto party or your stablecoin party, at least you could spot them, and everybody is a part of the collective witness of spotting them and kicking them out.
Right. And we can I think continue with the allegories here for hours. Oh, really? It's a really inspiring. It's just a really inspiring space, and there's so much, and how it's changing so fast. There's a lot of different allegories I think we could use. Before I move to the next session, I'll just quote a very smart guy whom Asaf Meir, my co-founder and CEO of Solidus. He points it out from the direction of compliance teams. Right. At the end of the day, if you have thousands of alerts every day, then either everyone's a crook, or the architecture of how you're trying to understand, who's a crook, is a bit ineffective, right? And we've been seeing through offering this, this concept of ecosystem monitoring, just how, seeing how regulators respond to it, seeing how, large banks respond to it. You can start to see the tide shift, towards this more sophisticated, newer surgical, almost replacing the bouncer with a drone that can detect from really high up an area where there's an issue, dive down, and point out and pull out or at least like flag an actor. And I think you can't argue with the fact it's hard to argue with the fact that the largest recovery in the history of the DOJ today is, to quote the judge in that case, thanks to the blockchain. And I think many law enforcement officers today would say that the blockchain is their friend, rather than 5 years ago where it was seen as a negative. So sorry, I just got very inspired by.
And the way I see the ecosystem monitoring question, the first point is subject to whose rules really does matter, because up to their own devices, many countries and many actors would like to have, information down to the micro transaction and the wallet. And as I said before, we have to operate on the basis of a presumption of privacy in our financial lives. I think it's a very big anchor. And one of the reasons there was such a strong backlash against central bank digital currencies is because of this erosion of trust in public institutions, including money itself. And so there has to be this presumption of privacy. What the monitoring opportunity creates, though, is if compliance is the speed limit, the who can drive a car, you need a license to drive a car, and the car has an alarm system, then the monitoring piece could be the passive restraints that could be built into modern cars. Lane departure systems, cruise control, these types of features can tell you whether or not you're straying in one direction or another, or there's sort of certain implied risks. But I still think we have to at all times guard against privacy erosion and effectively not fall into the compliance and risk theater that has in some ways preoccupied us for the last 50 or 60 years in banking and payments. And so somewhere in there is that perfect pragmatic approach that needs to be anchored. So it is encouraging that more and more jurisdictions are trying to think about what good looks like. It also is really important. Tornado Cash was a teachable lesson in this. Whenever good technologies are co-opted by bad actors, the obligation is on public and private actors to respond and not have good technologies co-opted by illicit actors, bad actors, and beyond, and mount a collective defense. And I think this is where we're going to see, hopefully, some real maturity and maturation in the entire digital asset value chain, from the wallet to the issuer of stablecoins and beyond, in this notion of collective defense. I think that should, for me, be one of the big policy objectives we ought to pursue in the post-Genius Act era, and as we look at crypto market structure rules coming into force.
Yes, and we'll keep on working on that. And I love that we went back to the allegories. I actually use the car brakes allegory a lot because really a car can only go as fast as its brakes can stop, right? And that's and if the blockchain is finance's fastest car, it deserves the most advanced, sophisticated brakes, right? Yep. Anyway, we are getting closer to the end of our conversation, but I'd be remiss if I didn't ask you on some super exciting initiatives coming out of Circle. The Circle Payments Network, which was introduced, I believe, last year, and then ARC, Circle's new layer 1 blockchain that's been announced recently. So can you tell us a little bit about those and just how they more broadly fit in Circle's roadmap? What more we can expect?
Yeah, no, thank you. Thanks for the question. The I mean, one, it would be a mistake to look at Circle and think of us merely as a stablecoin issuer. In fact, in some ways, the business that we are today is a manifestation of what was our original founding vision, laid by our CEO, Jeremy Allaire, of this notion of building an internet financial system. And for that system to be safe and sound and accessible by everyone, it needs certain components. And so we want to be able to not just contribute the money layer of the internet with regulated stablecoins that are fungible, universally accessible, internet scale, device centric, and market neutral. Remember, USDC is a market neutral dollar on the internet. It's available on 20 blockchains. It's available around the world. And at all times, it's conveying the safety, soundness, and trust of the dollar, but in this new form factor. We also then want to acknowledge that part of the unlock of creating a flywheel in this internet financial system is that we also have to have a hand in abstracting away the blockchains themselves and abstracting away where there might be gaps in the safety and soundness of this open infrastructure. For example, one of the first big pieces of product innovations we put out there was the cross-chain transfer protocol, CCTP.
Yep.
Because ironically, despite the inherent disaster resistance of blockchains vis-a-vis technology risk and data privacy and other forms of risks, bridging infrastructure in the blockchain ecosystem started becoming vulnerable, and honeypots themselves. And so CCTP was the very first big Circle infrastructure to support the broader ecosystem in a completely neutral, market neutral way. The Circle Payments Network, again, recently launched, is really designed to also help serve as a neutral orchestration and coordination layer for institutional money movement, be it across borders or across institutions. Because so many of the global central bank and policy discussions have said, you know what, stablecoins are a novel innovation, but we think their very best use case in terms of real world money movement could be in cross-border payments because of their instantaneity, their scale, and beyond. But what is missing is that orchestration layer between institutions. And so that's what the Circle Payments Network is all about. And we're progressively rolling this out across countries, remittance corridors with institutional counterparties. So watch that space. Now, more recently, ARC, again, new infrastructure from Circle designed to also address the developer nature of our work, the open technology nature of our work, designed to be a high-performing, secure, privacy-preserving blockchain that would effectively support not just USDC and our current generation of stablecoins like our Euro stablecoin, but others as well, because the market effectively wants this infrastructure to be consistently accessible by everyone and consistently usable both for institutional use cases and developer and retail use cases. So that's what ARC is, new for us this year. But all of that infrastructure and more from Circle is also part of the acknowledgement that it's not enough to issue a stablecoin,
right,
and subject yourself to the rules around the world. You also have to build out the supporting infrastructure towards this internet financial system vision that we have.
Right. Yeah. Well, really exciting to see how it continues to develop, and obviously, I'm sure we'll have many more conversations about this. But I was really excited about both announcements because as you said, it's such a natural. It seems such a natural add-on, and especially for Circle to lead as we really get close to more adoption. So now we're really close to the end. So I'll ask you my last question. It was supposed to be a speed run, but I'll focus on the one that is most interesting to me. And feel free to answer it as short or as long as you want. But I don't believe someone asked us 5 years ago that we would be believing we're having the conversation we are right now. What will we be talking about 5 and 10 years from now? What is, or maybe an easier way, an even more interesting way of asking it, what's the headline you would want to open the newspaper and read about Circle in 10 years from now?
Yeah. Well, I don't want to read about Circle in 10 years from now. What I would love to be able to say is, when cloud computing became a thing, there might have been a small category of companies that used the word cloud as a way of differentiating themselves. And then the technology faded to the background and didn't need to become a protagonist. I think the same holds true in the future, right? Is that if all of this internet financial system discussion that we've just waxed philosophical about is to money what the cloud was to computing, then in the future, we won't disassociate nor distinguish the notion of TradFi versus DeFi or crypto versus banking. What we're facing, frankly, is a convergence of these two innovations. And I think that, for me, is the most important long-range view, right? That if the policymaking world is no longer at war with the technology or the builders of these technologies, and we now have bills and laws like Genius and others in front of us, imagine what we can do in that future 5 years from today. So, if blockchain and crypto were not possible without the internet, the open question to ask ourselves is, what would not be possible in 5 years without open universal financial access to safe, sound forms of money and the corresponding internet financial system? That to me is encouraging. So no predictions, just a massive amount of encouragement of being able to unlock, for once, with US legal clarity, economic dynamism, competitiveness, access at scale.
I think it's such a strong message to send us away with. I always think about the fact that no one ever says, hey, I'm going to use the internet, right? We sit at home, we turn on Netflix, our experience is watching TV, but it's 50 times better than it was 10 years ago. And the internet is the reason, but it's not like you're actively using the internet. If that makes sense, as just, it sounds to me like that's essentially what you're saying. Like, the less people talk about the blockchain, the more we've really achieved our mission, as long as people can just enjoy more open finance. So, Dante, thank you so much for this conversation. It's been fascinating. It's been a privilege to work with you and to follow your and Circle's leadership for the past 5-10 years. And I'm really, really excited to do more. We're still at the very beginning, and much more we need to achieve together. So thank you so much for joining us today.
Thank you, my friend. Great to be here with you.